What's up, guys? So what we're gonna have to do is we're gonna have to monitor the dollar and the bonds to see whether or not the equity prices are going to stop falling. And very simply, at the moment, as you guys may know, the dollar is continuing to skyrocket to the upside. Of course, a strong dollar means a weak stock market, and so the dollar is clearly showing a lot of strength. Yes, it's overextended, but in weak markets, especially what the hell is going on in Europe, we can continue flying. And the 30-year bonds are starting to show a lot of vomiting weakness with these big red candles. And now at the moment, we can see that we are very, very overextended to the downside. We're opened and closed outside of the lower level of the Bollinger Band on the 30-year bonds. In history, we could continue to fall and fall much, much lower and continue to close outside of the lower level of the Bollinger Bands. But immediately now, this is starting to become very overextended to the downside on the bonds, and that is generally a good sign that the stock price can find some sort of a bottom. What we're not going to do is we're not going to try to look at the price of equities, namely right now the SPY or anything like that. We're not going to use the price of equities to determine whether or not there's a bottom in equity. All right, we clearly just have to monitor the larger macroeconomic indicators. And right now, we're using the dollar and the 30-year bonds. We see that there's strength in the dollar, there's weakness in the 30-year bonds. Therefore, there is most likely going to be continued weakness in the equities, unfortunately. So, essentially, right, we saw a bit of a wick to the downside. We are still failing to break above this trend line. This downtrend line is going to be very, very important. We could easily fall down to 357. We could easily fall down much lower, but so far we're seeing that 360 is holding on the SPY. The IWM and the NASDAQ are also very, very overextended to the downside. The NASDAQ held a bottom much better than the SPY and the IWM. You can see that the NASDAQ didn't make a new low. It held its prior low, whereas the SPY and the IWM both made newer lows today. And it's also not a great sign that the RSI on the IWM is moving upwards right now while the price is still stagnating at its lows. This is very, very sensitive price movement on the RSI, and we don't want to see that sort of movement happening. If you look at the SPY, you can see that the SPY's RSI is still falling lower, which is still a good sign, but the IWM's RSI is clearly starting to move upwards just a bit. But really, this is, essentially, it's just much easier to just go short at resistance. Right now, the dollar and the 30-year bonds can continue showing signs of weakness for the equities price, so we can continue falling lower. So the easiest day trades to be made are breaks of support, going short as breaks of support happen. So on a 1-minute candle, literally as we make a new low, you buy puts with a stop loss a bit higher, and there is momentum to the downside. And the other trade is basically you buy puts at major levels of resistance. And so far, we've seen that happening quite a bit. But the longer this takes to get a cracked... So essentially what's going on right now in the market, what I feel, there's two things that can end up happening. Number one, we're going to get a big move to the downside, very similar to basically this move that just happened where we were down like almost 20 points within a day, right? We're going to get some sort of move similar to that, where we're going to fall very, very sharply away from this trend line. And because we are very far, then because from that big movement to the downside, then we can end up having a bit of a bounce back up to these levels of resistance, and then another reshorting opportunity. But at the moment, things look very, very weak. So we could either get one big move to the downside, or we're going to get a screeching halt around 358 to 360, where that is going to be a short-term bottom for a bounce back up to these 370 to 373 level. Both of those scenarios still lead to bearish outcomes, because either way you're only getting retests to prior levels of resistance, and that would just be a better opportunity to go short. But at the moment, there's a lot of weakness in the market. The only things that you want to do for longer term holds are months out, so at least 30 days out. We got into October calls yesterday, and late October and early November calls yesterday, and we have to see if eventually the market ends up evening out, and then eventually we get some sort of move to the upside. But there's still a lot more room to go to the downside. I don't expect this to be a clean bottom at all, especially given the fact that the IWM is showing weakness. The SPY made newer lows, the bonds are making newer lows, and the dollar is making newer highs. So clearly, this is not the most bullish scenario, especially when you're trying to buy dips. What we want to see soon, within this week, primarily, or early next week, would be hopefully we can get a retest of 370 to 373. But potentially, if the market continues falling lower, we might not even see 370 to 371 for quite some time. Because if we do get a big move, if we do get a big move to the downside, right, and we end up closing to like 355, from 355, would that be a logical thing for us to come back and break above 370? Maybe, but it's difficult for me to believe that could end up happening. And this would be a very similar situation to like this price discovery of us not coming back to this price again would be very, very similar to basically what happened back in April of April of 2021, right here, where we gapped up above 400 on the SPY and we never came back to test 400 for over a year. So we never came back down to these levels until May of 2022. So yeah, we can end up having something very, very similar to that with the weakness that we see in the market. There's been two really, there's multiple things that are historically weak that are going on in the market. Recently, a few weeks ago, the NASDAQ did not bounce back into the Bollinger Band at the same rate. And then the second weak thing was that the SPY did not get a retest of the upper level of the Bollinger Band intraday. So those are two things that are statistical anomalies that happened, and that is primarily because we are in a bear market. So these things have a much smaller chance of happening to the upside because we're in a bear market. So pragmatically, that is what we have to view with the lens. There's been, I went over the Google Doc data of all of the times in history where we didn't get a retest. This was one of those times where we didn't get a retest a few weeks ago. And then again, this was the one time in history that didn't end up happening, where we didn't get a retest back up to the Bollinger Band a few days ago, and which was last Friday. So we can continue falling lower. So yeah, keep that in mind. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.